Hello, my name is Bradley McLean, co-founder of Regulation Asia. Financial crime risk for non-FI industries. Let's think gaming, streaming, and marketplaces. They're emerging and often misunderstood threats. Today, joining us is Henry Chan, head of Sanctions and International AML with Tencent, the world's largest game publisher, internet and entertainment behemoth, to discuss these challenges faced by emerging industries and their unique financial crime risks. Welcome, Henry.
Thank you for having me here, Brad. It's my pleasure.
Yeah. Wonderful. Now, Henry, as a starting point, I was hoping you could help us understand the types of financial crime risks that either emerging or observed by non-FI industries.
Sure. Well, I think I will start with a bit of a backdrop. So the history of money laundering, it dates back to almost a century ago. And for the first 90 years out of that century, money laundering has always taken place through traditional methods involving the FIs, right? Whether it's through hard cash, wire transfers, trade-based money laundering, et cetera, et cetera. As a result, the banks have invested a lot of money in AML experts and systems to systematically make laundering money harder and more costly for criminals. So only really in the recent 10 years, we've seen a material shift in financial crime activities to the online space. So what we call cyber-enabled financial crime. So today I'll be focusing our discussion today mostly on my observations and experiences dealing with financial crime risk in the internet industry. So the interesting thing about cyber-enabled financial crime is that it's being perceived as a lot easier and more cost-effective way for criminals to launder money. The fact that cyber criminals don't have to prove legitimacy of their transactions online, which is not really the case in traditional banking channels. And that fact alone significantly lowers the cost of money laundering. So it literally redefines the traditional concepts of money laundering model of placement, layering, and integration. So today I'm gonna give two examples of how money laundering takes place in the online space through online video games and live streaming. All right. So first of all, video games. So in a typical online game, the use of convertible and non-convertible currencies, virtual currencies, and in-game accessories, and the fact that users can play anonymously creates an extremely attractive environment for cyber criminal activities. So there is substantial and established black markets for the trading of these virtual currencies and game accessories. So through these black markets, criminal can send virtual money to associates to another country, which can then be transferred into real money. And we've seen that system being abused by criminal organizations everywhere. So the use of online games to launder money provides a very good channel for layering activities, where criminals have legitimate explanation for proceeds generated through virtual game currency and in-game accessories. So that's online game. Besides online games, we're also seeing live streaming industry as an uprise in the internet space. Because essentially it basically enables anyone with an internet-enabled smartphone like this to broadcast him or herself and have a chance to become rich and famous. That sounds good. So on a lot of social media apps with live streaming platforms, influencers and celebrities broadcast real life videos of themselves doing all kinds of things, including like chatting to fans, conducting makeup tutorials, broadcasting daily activities, or even broadcasting online gameplays. So viewers can then send them virtual gifts, cash tips, or even purchase products featured in those videos directly from the streams, which creates a transfer of value to the live streamer. So live streaming is a possible platform for money laundering, and it's in an uprise because the purpose of these value transfers cannot be easily established, and the possible sheer volume of transfers from multiple online parties to a live streamer makes it extremely difficult to track. We've seen cases where a live streamer could receive up to $1 million in one night of streaming. So it's also a really easy way for criminal organizations to create multiple fake online accounts to transfer values to a live streamer to launder illegal proceeds. Of course, there are many more other examples of cyber-enabled financial crime activities, but I think the examples of online game and live streaming gives everyone kind of a good flavor of what it looks like.
I mean, you're mentioning $1 million in a single night in terms of streaming. I mean, from your perspective, what are the key challenges specifically faced by internet companies in implementing financial crime controls?
Well, that's a very good question. I think internet companies commonly faces two types of key challenges when it comes to implementing suitable financial crime controls. The first challenge I see is the anonymity. So internet companies, they don't have the luxury of having face-to-face interactions with their customers. So they cannot easily validate the identity of the users, and they cannot ask probing questions to understand their customers better and assign them a risk rating accordingly, in stark contrast to traditional banks. And that challenge is compounded by the fact that, well, the internet platforms are not constrained by neither time nor space. So user can access the platform internationally anywhere. So there's no geographical boundaries. So by anyone from anywhere, including sanctioned individuals, professional money laundering organizations, and even potential terrorists. So that's one big challenge. The second challenge I see is the lack of standards. So traditional FIs are heavily regulated across most jurisdictions. They have stringent controls in onboarding KYC, sanction screening, transaction monitoring, and FCC-related system requirements. So it acts as a very high barrier of entry to the FIs. So the industry as a whole operates with a set of minimum standards with the bar set sufficiently high. So in contrast, most financial AML regimes across major jurisdictions do not cover the internet industry segment specifically. So basically, there's no industry standards on what FCC controls are required. Startups and smaller internet companies do not really have the resources to build and maintain sophisticated compliance programs. And they also lack the incentive to make the investment because, well, there's seemingly no real consequences in not paying attention to FCC, although it's not really the case. I'm going to give an example. I want to share a fact that, I mean, since 2019 to date, over 70% of enforcement actions announced by OFAC targeted non-financial institutions. So they are at risk. And I think the internet industry is particularly vulnerable, given the large number of new entrants and startups in that space. And they don't exactly know what they're doing from this angle. So the industry is actually facing a very real risk here as we speak.
Interesting. I mean, you've in the point one there, you've actually connected potentially, FCC issues within non-financial FIs with terrorism financing. I mean, you also mentioned the concept of time and space. I mean, now correct me if I'm wrong, but it seems that given the lack of regulation across gaming and streaming ecosystems, it appears that internet companies have an advantage over FIs in the lack of regulations and restrictions. I mean, what's your perspective on this?
I think that's an interesting question. And let me explain it in two ways, right? So, I mean, I think there's an interesting relationship between the FIs and the internet platforms. I mean, first of all, there's always that open debate, ongoing debate on whether internet companies with the FinTech platforms are taking businesses away from the FIs, right? And they're competing with each other. And the old FI business model is being marginalized by the new internet players. However, what is less spoken about is how the FIs and internet companies are actually complementary of each other. And I'll tell you why. The internet industry relies heavily on FIs as payment gateways to facilitate a lot of their customer transactions happening online. So, for example, most consumer e-wallets have customer accounts that are funded from banks, either directly through the deposit accounts or through the credit cards. E-wallets, C2B merchant transactions are also conducted through banks and licensed payment companies as a conduit. So banks also play a significant role in most e-commerce transactions. So when you purchase an accessory in an online game, the payment routes through the banking channel as a gateway before the payment reaches the game operator. So in fact, internet companies are some of the most lucrative payment and cash management customers of traditional banks, generating very good revenues on wire transfers, credit card transactions, and foreign exchange transactions, etc. On the other hand, as a side benefit of utilizing the traditional banking channels, banks act as a gatekeeper of financial crime for internet companies. So all transactions routing through the banks have to pass through their stringent FCC filters, such as transaction monitoring and sanction screening, before it acts. And therefore, I think it acts as a very reliable line of defense for internet companies who utilizes their services. So the way I see that relationship between the FIs and the internet companies are actually complementary of each other, rather than strictly in direct competition.
Okay. Complementary, not competition. You've mentioned gatekeepers, right? Your role as a gatekeeper. I mean, what are some of the common measures taken by internet companies in combating financial crime? I mean, are internet companies doing enough? Are they going far enough? Is self-regulation sufficient?
Okay, that's a question I get a lot, and there's actually no good answer, and I'll tell you why. I think, first of all, I mean, despite all the disadvantages and challenges that I've mentioned earlier faced by internet companies in doing FCC controls, in my discussion with a lot of industry peers, non-financial internet platforms are also making significant investments in ramping up their FCC programs. And I see a lot of good examples, actually. I mean, some of the common FCC controls I see being implemented includes things such as IP blocks to avoid access of products and services being accessed from sanctioned countries. I see e-commerce companies banning shipments of goods to sanctioned countries and individuals. And I see internet companies who invested heavily in screening systems in place to conduct name screening on suppliers, merchants, app developers, and their related third parties, etc., to identify and avoid dealing with blacklisted individuals. And another example is I've also seen internet companies conducting enhanced due diligence in screening and selecting payment institutions that they work with as payment gateways. So they would have AML questionnaires, sanctions questionnaires, due diligence interviews with these companies to make sure that the FI they work with have proper KYC and sanctions controls to onboard and monitor the customers. So it is an alternative way for internet companies to mitigate the risk of not having proper end user KYC information in place. So these are some of the common practices I've seen, but like I said earlier, there's no set of standards for the industry. So that control varies significantly from one internet company to another. So go back to your question, is this self-regulation sufficient? I say to some extent, yes, but to a larger extent to smaller companies with less resources to build up their programs, it's not really the case. I don't think the industry on average is doing enough.
Okay, so you think that the industry itself should be doing more. I mean, it seems based on what you just highlighted, some companies are best practice, but others are lagging behind. I mean, from your perspective, what are the key opportunities for internet companies or other emerging digital industries to significantly enhance financial crime controls?
I think there are many ways for the industry to move the needle. I mean, the needle's not where it needs to be right now. On top of my mind, I can think of 3 different ways involving participation, say, from global policy setting bodies, from the public sector, and as well as the private sector. So first of all, I would love to see influential global AML organizations, such as the FATF, to initiate research and start publishing typologies specific to the internet industry. And more importantly, provide further guidance on how the industry could establish necessary controls in mitigating financial crimes. This would potentially set a much needed baseline for the industry participants to build appropriate AML programs and to give them guidance on how to do it. Secondly, I think governments who are considering the establishment of centralized KYC utilities could allow internet companies to also have access to the repository. Of course, it would need to resolve plenty of legal and privacy issues, which I would not be going into today. But if successful, I think it could be a potential solution to resolving the anonymous user base problem for the industry. On the other hand, I would also urge the FIUs to increasingly adopt a cross-jurisdictional approach in tackling financial crime cases, as most cyber-enabled money laundering schemes involve multiple jurisdictions. So it makes a lot of sense for the FIUs to join up on these types of cases and crack down on multinational cybercrimes. Lastly, just one last point here. So I think the intelligence sharing between the FIs and the internet platforms can also greatly improve the abilities of both sides to establish purpose of online transactions and to greatly improve the efficiency and effectiveness of the transaction monitoring process. Well, on the one hand, the FIs are equipped with customers' KYC information and a wealth of financial transaction data. If they could collaborate with the internet companies and leverage on their artificial intelligence on its customers' online transacting patterns, the combined intelligence would be a very powerful source to allow both banks and internet companies to more precisely identify and predict suspicious online activities. I mean, the three approaches I just mentioned all require active participation from all the industry stakeholders. And each of them do have a major role to play in tackling financial crimes in the internet industry. So I think the more robust and complex various online marketplaces become, which is the trend right now, the more untraceable methods these criminals are finding to launder money. So I think as an industry, we have to continue not only to innovate in our products and services, but also on our approach to tackle financial crimes.
It's really interesting the points that you've raised. I mean, you've highlighted the competitive advantage of bad actors, their ability to react and change quicker than the regulators and the compliance teams. But you've highlighted obviously around privacy data, cross-border challenges. You know, these are issues that are obviously affecting anyway in traditional FIs as well and fintechs along the way. I guess the big challenge there is with internet companies, they're all at different stages of the growth life cycle. It sounds like though you're making a call to action to the bad, to help set that benchmark, as you mentioned. But I guess, as people walk away from today's discussion, I mean, what would be the key takeaways you'd like people to really kind of take away from today's discussion?
I think there are several takeaways. I would say I would urge, like I said, the industry participants, the internet companies to start thinking about FCCs, right? So it is a real risk. Like I said, OFAC pays a lot of attention to what the internet industry is doing, to the non-FIs are doing. We, as an industry, we not only have to self-regulate. I think I'm also calling for the industry to collaborate and to set a better standards for ourselves before the government or the Fed have to come up with the standards themselves. I mean, it would be great for the industry as a whole to set a golden standard and set the benchmark for ourselves. I think that would be one key message I have out there. And of course, I would also urge different jurisdictions, governments, to start thinking about how to facilitate these discussions amongst the industry players across different jurisdictions, as well as to facilitate more these public-private partnerships in how the public sector can help the private sector in setting the benchmark and in facilitating things such as enabling the sharing of information, the KYC repository, et cetera, et cetera. So I think these are things that I would love to see happening.
Excellent. I actually look forward to taking some of these points up with the regulators panel tomorrow. But with that, unfortunately, we're out of time. Thank you, Henry Chan, Head of Sanctions and International AML with Tencent, for your time and sharing your valuable insights. Next up is our panel on the future of identity and financial crime compliance.